What's going on, everyone? Welcome to another edition of Friday Wrap Up with yours truly, Kevin Weedmark, aka the Mortgage Mouth. I like how that just rolls off my tongue these days. Every Friday, I like to come to you and make sure that we are all on the same page with regards to what happened this past week in the market as it pertains to interest rates. So whether we're showing open houses, whether we're driving clients around, it is a beautiful sunny day here in Austin. A little on the chilly side, but we will take it. Or we're just dialing, right? We're dialing, we're calling and talking to clients. They are going to have questions, so I want to make sure that we're all on the same page. So the biggest thing that I saw this week is uncertainty seems to be in control of the interest rates regardless of data right now. Trump has indicated that he's not going to implement tariffs until February 1st. So therefore, it has everyone kind of on pins and needles. What is that going to look like? What is it going to do to inflation? We saw CPI last week, and we also saw the services PMI this week indicate that, you know what, there is some stability on the inflation side. But what are the Trump tariffs going to do? So we have a lot of uncertainty, and those are coming at us on February 1st. We also had a slew of executive orders that once again have rates in a holding pattern. We seem to be just kind of in this very flat curve right now. We have the Fed coming at us next week. So that is something to watch for. They are not going to do a damn thing as it pertains to the Fed funds rate, so don't get any giddy there. But once again, it's going to be their vernacular. What do they come out and have to say? Are they going to get political with regards to tariffs? What is going to be their language? So that could be a potential market mover. But again, we just seem to be in this holding pattern, once again, stuck. And we seem to have a 10-year Treasury that wants to float between high 4.5 to about 4.65. We ended the week at about 4.617. You know, that's fairly high for overall the last 12 months. But again, it's much lower than the 4.8 that we saw. So we're not going to be back up into interest rates around 8% anytime soon. The one thing that was great this week is we had existing home sales hit, their highest level since February. And what did we talk about in my 2025 forecast? We talked about increased inventory, and we're already seeing it. I went through numbers this past week on my show, What's Brewing, with the wonderful Jennifer Goodman. And essentially, we looked at it across the board. I mean, I want to say Travis County was up 351% with 457, I think, new listings. The market is starting to heat up, especially in your southern states. You're going to see that activity. We don't experience the harsh winters. You're going to start seeing that pick up around your March, April, May timeframe, up in the Midwest, up in the Northeast, up in the Northwest. But right now, you're already seeing that right here in Austin, Texas. We're already seeing that increased inventory. And Trump has been on the move. The one thing that he did mention, his emergency price relief for housing. We all know that we have a housing crisis. He put pressure on the Federal Reserve yesterday for a cut in the Fed funds rate. We're going to see what that actually does, but I expect a lot of that to pick up. I think we're going to see a lot of butting heads between the Fed and Trump. I think Trump obviously is going to be a lot more vocal. I think the Fed is going to take a little bit of step back, claiming that they're non-political. We know how that goes. But I think that's going to pick up a lot of steam. We also have continuing resolution coming. We have a debt ceiling that's looming come March. So there's a lot of things coming down the pike. And the other thing I really want to stress once again is buydowns. They seem to go unnoticed at times. And especially with increased inventory, right? You're going to have increased competition. But if I'm a buyer and I'm representing a buyer, there is no question that I'm going to be making an offer with seller concessions so that my buyer can potentially use that money for closing costs or to buy down that interest rate. Right now, you'd have the ability to buy down interest rates into the low fives. You'd be anywhere from 5 to 5.5%. As we've already talked about before, especially on this show, that seems to be a magic number where a lot of economists believe that the market will absolutely pick up. So that's what I wanted to bring to you today. I hope that helps as we're heading into the weekend. Look, just kind of stability, a lot of uncertainty. Make sure that your clients are well aware. There's going to be peaks and valleys. We talked about Q1 being extremely bumpy, and that's exactly what we're getting. There's a lot of unknown, and we have big stuff coming at us this week with the Fed meeting, Fed policy meeting, their vernacular, as well as the implementation of tariffs according to Trump on February 1st. All right, y'all, you need anything over the weekend? I'm always working. You need a quote, pre-approval, you need a flyer for one of your houses that you have listed. Please do not hesitate to reach out and let me know. Everyone have a great weekend, and I'll be coming at you Monday with the weekly wrap-up. Take care.